Hey guys, Mike here. So it was a big day for small caps on Friday. The other indexes, they're doing okay till 1:30, and then you'll see what happened to those if you didn't notice. And of course, we had more job data come out, and the unemployment rate, man, that is just a brick wall, isn't it? I mean, I know the Fed still has to be sitting there shaking their head, but I'll break down the numbers by the types of jobs and show you why they're just having no real effect, right? And it's got to do with two real things. I'm also going to spend some time breaking down the Russell 2000, which is the small caps, because some people say, hey, it's getting ready to break out, and could be right. We've been hearing that a while, but I'll show you what you need to know, right? You need to look behind the curtain and say why the other index is just killing it and this thing right here is just struggling like crazy, and I'll show you why. It might surprise quite a few of you and stuff. And then we'll go into some other stocks like Tesla and stuff, show you what happened with that one on Friday. But you can see we had ADP report before, right? And it was super high. And then you had this one come in, another type of payroll report. And it's just a little lower than what they expected. But again, people still getting hired, right? Still creating more jobs. You can still see down at the bottom down there, that's non-farm payrolls month over month. Still being created, even though it seems like it is slowing, right? Trying to slow. But again, when you look to the left and look through 2015 to 2019, and then you look to the right, past 2021 on, a lot more jobs, okay? And you look at the unemployment rate, man, 3.6% it dropped. And when you look at this chart, thanks to Charlie here, you can look back at these kind of levels we're talking about, and it labels them out to you. 1953, 1969, 2000, February 2020, April 2023. You just don't see like 3.7 and below that much. And so understand, this is it's you want to call it healthy, whatever you want to call it, but people are working, right? Jobs are still being created, all right? And so, that's got the Fed in a quandary, because guess what that does? It keeps demand up. As long as we're pulling paychecks in, it keeps demand up, and it will most likely keep prices up because companies will keep raising them anyway. And then, of course, there's the earnings, right? And you can see monthly percentage change. Again, it's almost like stuck at like 0.4% and stuff. And of course, when you take in the rate of inflation and stuff, you're still negative on earnings, to be honest with you. But most people don't think about it like that. And then here's average hourly earnings year over year. And you can see right here, it is heading down. But look at what the average is. Let's say, what do you think? 2.5% right there. Normal be year over year. And we're nowhere close to that. And so, even went to 3. We're way off from that. And of course, why is the Fed not having any luck here? We already talked about this. Healthcare, can't affect it. Government jobs, look at the top two. Government, healthcare, right? They cannot affect those jobs with rates. Doesn't work that way. They can affect construction, which ain't working right now because why? The government's spending hundreds of billions of dollars on that infrastructure bill, so they can't really affect that either. Leisure and hospitality they can, professional business services they can, financial activities, manufacturing, which they've done. You see the negative ones down there. And so, but again, top two, not happening. And then when we look at the seasonality of non-farm payroll data, you can see 2022 is the top line, 2023, where we've been going, is the middle, and then the average, right? So you should see the second half of July into August, it should go flat or even down a little bit. So we'll see if this continues to follow that or not. I think it has a lot to do with obviously seasonality. That's another reason the Fed's struggling like crazy right now to affect the job market. And then starting in September, you see more ramping up. I assume that's for the holidays and everything else. And guys, before we continue, if you're getting anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. And of course, you know what I'm going to say. As long as you got paychecks, jobs, demand is going to be strong, because we're going to be taking those credit cards and running those things up so fast, smoke's going to be coming off of them. That's what's been happening, right? So that's what's going to continue to happen, and hopefully we don't hit hard times, because when we hit hard times in the economy, is the people that can't afford to lose their jobs, as somebody said in the comments in the last video, that, end up losing their jobs, right? And they go, oof, sure wish I'd have put a little back on that one. I wish you would have too. But, you keep doing you, and we'll see how it works out for you, all right? So now, we're going to go over the sentiment, which just came out again, and it's higher than it's been in quite a long time. And that shouldn't be any surprise. And then we'll go into Russell 2000. But, you can see right here, it came out July 5th, bullishness 46.4%. So you thought 45.2 was high on June 14th. Nope. Went up some more. Again, it's been a while, so we got here, but this is, what you'll normally see is what happened is you got bears capitulating and short sellers capitulating, which I'll actually show you that too, and moving into, actually I'll show you that tomorrow, moving into the stock market, right? And when you look at, the index I think people are watching probably the most is probably the Russell 2000, okay? The small caps, trying to get these smaller companies, and again, these are billion-dollar companies, but they're much smaller than the ones most people think about. And, had a big day Friday, sold off at the very end, but again, still just kind of in that range, in that volume gap right there. And you see what happened when it hit a little resistance, right? It ended up stopping right dead in its tracks, and it still has to get above that all-time anchor VWAP. If it can get up in this gap right here, though, it will move very, very quickly, okay? And that's what you got to remember. It just has to get above 189, close above 189. I think you'll see a lot of money start flowing into it. But, the big question is, what is it flowing into, right? That's what you got to think about. And again, for this index to break out, these sectors got to be doing better. Industrials are doing good. That's their number one. Number two, healthcare, just pull it up. It is not doing anything, all right, 2023. Financials, you know all about, okay? Not happening, way off from where they were at. IT doing good, right? This is your technology. Consumer discretionary doing pretty good. And the reason why these really top five are the only ones that really matter, because it's 73% of the index, okay? So the rest of these, you need to pull up a little bit or at least stay flat. But again, the top five are 73%, so it really is all that matters. And when you look down here at the weights, you can see why this one struggles. Again, the top stock is 0.50%. Look at this stock. It's up 428% since the October low. It's 4x'd. And yet the index has done nothing, right? Look at Apple. It's up 45%, but it makes up 8% of the S&P 500, okay? So just that 45% move, when you account for 8% of an index has 500 stocks, the index moves up, right? Because remember, Microsoft makes up almost 7%. Just two stocks are 15% out of 500. And when you go at the rest of them, you can see it drops down to 0.3, 0.29. And when you scroll through here and look at what sectors these are in, we're not recognizing any of these ticker symbols. And you can see one thing you'll notice is there's going to be a lot of healthcare, a lot of industrials, right? But the healthcare has to start picking up, and it has a lot of pharma stocks in it. And pharma stocks are just hit or miss, right? Your drugs get approved or your drugs don't get approved. You see the weighting to the right there? So, a few stocks out of 2,000 that are 0.2 and more, but there's some stocks in here that literally account for like 0.001 and stuff. I mean, just nothing. So they can go up 400%. When you have any weighting in your index, doesn't really affect it that much, right? And what do pharma stocks do? They can pop up huge, they can drop huge. But what this index needs banks to really start recovering instead of doing like this chopped mess. Pick a direction and go, which could happen. A lot of people think that'll happen because they're one of those beaten down sectors. We're talking about regional banks and smaller banks, right? And so that one, and then healthcare is another one. It's just dragging and lagging behind all year. And a lot of people like, the healthcare sector, because what money tends to rotate into is the stocks that aren't doing that well. The other thing to look at is their number one stock. It is 0.50. It's like it's going up 430%. Put in the comments, how much more is it going up? Because if you pull up a weekly, it's a straight line up since October. Straight line straight up. And so, people start getting hesitant when it's up 400%, right? But that's your number one stock. And so, again, we'll have to see, because I went through, and I'm doing this for the members this weekend actually, going through and looking for stocks that have that trend line coming across, maybe getting ready to break out, with that rounding bottom, and then looking up the short interest. And some of those stocks still have like 25, 30% short interest. So again, that's when you saw that big pop up in the Russell, and when it failed around 188, it was short squeeze, just like I showed you. And I said when the short squeezes stop, let's see where it stands, and it fell like a rock, okay? And so that's one thing, we just got to look at, and it's not about you and me. We got to wait to see if big money is going to rotate in there, right? And so that's just what we got to, look at and stuff. And, when you looked at the index, I didn't see anything on the news at 1:30. I could have missed it. My mom's in town. I took her and my son to the beach or whatever, so I was at the beach when this took place on Friday. But the S&P goes up, and it's looking good, and then boom, 1:30 hits. Right after New York lunch, bam. Completely sells off, gives all the gains back, right? Ends up going red for the day. Qs, the charts look identical, right? Moves up, 1:30 hits, bam, completely sells off. And so I don't know what happened there. If you happen to see any news that caused all that, let me know. Or was it just simply a Friday? Now, With the Qs real quick, you can see right here, that 372-ish area right there, it's having a lot of trouble getting through that. It's 3 times rejected just in that little area. If you go back, you'll see multiple rejections off that. So that's definitely causing some issues for the Qs to move through right now. And then when you look at something else that's going on, is the equal weighted ETFs of the S&P 500 stuff, right? I mean, you look here on the monthly and they're almost identical, right? Actually, if you look, the equal weighted ETF for the S&P is actually a little more over the last month. And then of course you go to the 5-day and you can see right there, once again, they're about dead even, but the equal weighted is a little bit more, which means that those top 10 stocks carrying it up, other stocks started to move up a little more. And so that's why you're seeing the equal weighted move up. Qs, kind of the same. I mean, they're somewhat similar, but still the equal weight is down farther down here than the QQQE is. On the 1 month, you see on the 5-day, basically the same thing, but they're much closer than they were. And so you can still see a little broadening out on that. I pretty much put more weight into the SPY and its equal weight ETF than I do the Qs, because it's just a lot of technology and there's other things in there. And that takes us on to Tesla, right? And Tesla, again, it's one of those things, if you don't get big news out, like deliveries, earnings, other people using their chargers, it's kind of just sitting there consolidating this area, and that's fine. That's what it normally will do and stuff. Left another gap behind last week, as we know. Again, it's just following this trend line. The question is, it has earnings coming up, not too far from now, and so will it sit here and just try to gradually consolidate and then make its move on earnings, which will be big news one way or the other. And when you look at past earnings, I mean, I think they seem, when I looked at the last like 8, the majority of the time it actually went up, but there were a few where it dropped and stuff. And then, I wish, if anything, they would just fill this gap coming up this week before earnings. And then I think you'll get, obviously, a bounce back up to that trend line. We'll have to see, because a lot of people think this is going to 300, but I think a lot of that's going to depend on earnings and stuff, right? And they did have, a little news about Mercedes-Benz says by 2025, they're going to start using their chargers as well. So once again, cementing the fact they have the #1 charging network in the country. And it's not just Tesla. I mean, you can see Rivian, huge short squeeze going on Rivian pretty much all week, right? And this thing's up enormous. Lucid was a short squeeze as well. Definitely cashed out my calls too early on Lucid. And then NEO, XPEV, and so EV mania has kind of come back in. A lot of call options coming back into EVs, right? And so it's not just Tesla here. BABA had a huge day. It was up almost 10% at one point in time. You can see it's way overbought on the hourly. But basically what happened was they had news come out. And what it is, China's going to take their pound of flesh with a $1.1 billion fine into Ant Group, which is the mother company of BABA. And what they think this means is they're finally done with the regulatory junk, and so they'll let this stock actually move and take a lot of fear off the table from people. And so that's what the big hype was about and everything. You can see when it got above that, like usually 89 level, like it'll move fast to 94, right? And so it gets in that volume gap. This is how this does. It gaps up, gaps down, all over the place. But again, with this fear removed, you could see, because all the Chinese stocks are up, big money start rolling back in. We're just going to have to see now that China got its pound of flesh. And also another thing that came out was Ant Group talking about repurchasing stock and everything, so stock buybacks, and they're proposing to buy back up to 7.6% of shares in an effort to retain talent and offer an exit for investors ensnared by a year-long regulatory crackdown at the company. So obviously that will help shares move up as well. But of course it is China, and we will have to see. It's like flipping a coin, right? You just never know. We've heard this story before, like, oh, they're done, it's been okay, and then they'll come out with something else. Okay, so just keep that in mind and stuff. But yeah, let me know what you think about small caps, things like that. Again, people are talking about island reversals and things on the S&P. I showed you the Qs, a lot of resistance right there at the top and everything. You're also going to have, and I'll show you in tomorrow's video what I'm talking about with seasonality into the second half of June, going into August, things like that, and what that looks like. So just keep that in mind. But last week was hard to judge, like I said, because you got 3.5 days where the market's open. It's a holiday week, all that good stuff. And so, crazy moves on Thursday, gave some back Friday, then retook it after lunch. Again, let me know if you saw some news on Friday at 1:30 that made the market just completely sell off like that. But the IWM did hold 1% of its gains. So again, got to close above 189, guys. That is the key. And I implore you, if you're just buying IWM, make sure you look through what stocks are in there. Actually look through the individual stocks. I've showed the members how to download it into TradingView. You can actually look at every chart instead of just looking at the index and stuff, because that has to happen. So, and you need big money to come in there. That's what has to happen and buy those stocks and everything. Okay, so anyway, I hope you guys got some out of it. Hit the like, subscribe if you did, and I'll show put together a video you guys for tomorrow to set us up for the week, because we got some big earnings coming up. So have a good one, guys. I'll see you later.